risk planning. Now, I want everybody to be honest with yourselves. How many of you have a daily risk limit? Tell me. How many of you have a daily risk limit? Everybody does. Everybody has a daily risk limit. But how many of you follow it? You know, how many of you follow your daily risk limit? Like, let's say if you say, I have a $1,000 account and I'm going to risk $50, right? And now you can turn around and say, oh, hey, Raja Banks, or hey, Uncle Ted, I have a daily risk limit of $100. If I lose $100, I'm going to stop trading, right? But something happens in the market. Something happens, a news comes out, and you see your opportunity to take a trade, and you take that trade, and you lose $100. You're down $100 now, right? What happens after that? You want to make it back. Even though you've reached your daily limit, you want to make it back, or you want to make a little part of it back, right? So now either you're going to increase your lot size, or you're going to reduce your lot size and take a lot of trades, and what's going to happen? 70% of the time, you're going to lose more. So now you're down more than $100. Now ask yourself, did you follow your daily risk limit? No, you didn't follow it. You had it. You had it in your plan. You can tell your mentor, or you can tell me that, hey, I had a daily risk limit, but I still lost more money. Why? Because you didn't protect yourself from yourself, right? These things here, these risks are over trading or over leveraging. No one's going to teach you that. There's no book written to teach you, hey man, like follow these steps to not over leverage, or hey man, follow these steps to not over trade. There's no fucking book on that. That's all you. That's how you stop yourself from not taking another trade. Yes, Patrick, it's being recorded. It's going to be in all the drives, right? So you really need to be disciplined, man. Like there's no book, there's no article, there's no magic formula to really teach you how not to over leverage. That's all you. If you take another trade, that's on you, man. You took that next trade and you lost it, or you blew your account. That's just on you. Why? Because you didn't follow your rule. You didn't follow a daily risk limit. Like when you go to the gym and you can bench a maximum 225, you're not going to say, hey man, let me bench 400 pounds and break my fucking elbows. No, you're not going to do that. You're probably gonna try to lift 200 pounds or maybe 185, but not more than 225, because you know that's your risk limit. That's your limit. You can't go over your limit. Just like when you go to the bars and you say, hey, like, you know what, I'm gonna go for the hottest girl. No, you know your risk, right? How far are you gonna put your yeah? So when I say risk limit is that how much are you willing to risk every day? It's not about stop loss. It's not about your risk reward, because trust me, at the end of the day, when you lose money, that hurts more than losing pips, right? You can lose $10 on 10 pips, or you can lose $10 on 50 pips. It's still $10, right? And at the end of the day, it's the money that's gonna matter. That's it. It's not pips. Like if you're an experienced trader, you're gonna start looking at pips. But when you are a new trader, when you're making a trading plan and you're losing money, that's gonna define on how you look at the market, on how you, like, you know, if you want to take revenge on the market because you lost money, right? So this is what I mean when I say risk limit is how much money are you risking every day? So if you have $1,000 account, I would say maybe you're risking $50 a day. Like when you lose $50, you're done for the day. Then you wait for the next day. Because the rule of the game is to stay in the fucking game. Right? Because if you're losing $50 every day, there has to be a day when you're going to make all that $50 back, right? That's the thing. You need to make percentages. right? Because trading at the end of the day is like a business, right? So you need to treat it like a business. Now, I know some people here, they work for big companies, they work for corporations. Some people here, they run their own businesses. You all know that every business, they have a contingency plan. Yeah, so that's right, Raya. Rule of the day is to stay in the game. That's the rule of the day, right? So now when you run businesses, you have contingency plans. Like, let's say you do something as a business and it fails. What do? You go back to the drawing board and you make sure that when you do the same thing, it doesn't fail, right? That's what keeps you in business, right? If you're running, let's say if you're coaching a soccer team, right? You're coaching a soccer team and you know the mistakes players are making. So you go to the drawing board and you make sure that those players don't make the same mistakes. Then that's when you have winning teams, right? So trading is the same thing. Like, if you see that you are over trading and you're risking more than what you're supposed to risk and it's not working, maybe don't do that again, right? Makes sense, right? Maybe stop it, right? Like, most of you have been trading for 5 years. I know someone is here, they've been trading for 10 years, not profitable. Why? Why are you not profitable? You're over leveraging. You're jumping from strategies to strategies. You're hopping from mentors to mentors. You're spending hundreds, like if not thousands, but hundreds of dollars, right, on different theories and patterns. It's not working. It hasn't been working for all these years and months, right? So you need to change something. And this is the change. Like, I know people who still do the same thing over and over again. They still have the same habits and they're looking for a change. The change is not going to come until you don't change your habits every day. Like, if you've been like chasing losses 3, 4, 5 years, how the fuck are you going to think you're going to make profits? You need to change those habits. Like, okay, this is what I'm going to do this month, right? So next month is next week we're going to have a new month of May, 6th month of the year. I'm going to trade once a day, right? Because I want more profits. So for me to get more profits, maybe I need to change something, right? Because the things I'm doing now, maybe they're not making me profits. Duh. So maybe try change, try change for a month. Like, I know it sounds stupid to take one trade a day, right? But think about it, right? When people run simulators, they are doing 200%, 300% over the course of 1 week. But on simulation, that took 20 minutes, 30 minutes. Oh, sorry, not 1 week, 3 weeks, right? That took 1 hour maybe on this simulation. So when you're trading live, you need to understand it's going to take that time. You're taking one trade a day, right? Then you're moving on to the next day. You're taking the next trade and the next day and the next day, right? So you need to develop this change in your habits of trading, right? Because I just say, just try this change for a month and you're going to be amazed. Like Alex here, he had a full margin account. He took that account to a very, very high percentage. He was over leveraging, over trading, and then he brought it all back down because he was over leveraging, right? This happened to me too once. But once he said, hey, like, you know what? I'm going to start doing this one trade a day. It's just profits from there on because he knows it works. And the only thing that doesn't work is doing the old things you've been doing all this time. Like, how much pain are you going to take, right? So you really need to focus on doing something different with trading. Okay, so we're going to talk about some risk over here, right? And I think this is a very, very important topic, and I get a lot of questions on risk aversion as well. So first, what we're going to talk about is a fixed risk per trade. Right now, 5% is wrong. I would want to put this down to, let's say, like 2%, right? So this is your fixed fixed risk, right? So let's say you're taking a trade, right? You see a setup, you see that, okay, like, you know what, price broke out resistance, it's doing a retest. And I've seen these retests happen on Instagram posts, on people I follow. They've taken retests. So this is going to be a very, very high profitable trade, right? So what you do is you enter a position buy right over here with a stop loss at 2% risk, right? Because trading is taking a risk, right? So if you take this trade, you're risking 2%. If it hits your stop loss, you risk 2%. Oh, well, that's okay. You're going to wait for the next time it does the same pattern. So there you go. That is your static risk, 2%. Maybe your gain is 2%, or if it starts running through, maybe your gain is 5%, right? So that's your static risk. Static risk is when you are not diversifying your risk. When you think, okay, you have a good entry, you're going to enter here and you're going to risk, like, it's going to be a static risk. Like, it's going to be a very, very, like, it's going to, like, straightforward. If it hits your stop loss, you're losing 2%, right? So the next thing, what we really focus on is what I've actually been focusing on is called dynamic. Okay, one thing I want to ask: how's my pace? Like, is my pace too fast? Like, you know, perfect. Yeah, because I know I've been overdosing on coffee a lot, so I'm might be, like, you know, talking a lot. So just want to make sure I'm on good pace. Okay, perfect. Perfect. All right. Next thing is dynamic risk, right? Dynamic risk is when you're spreading out your entries, right? When you're really spreading out your entries, it's when, let's say that you have a zone, right? So let me just draw a 4-hour, let's say this is a 4-hour zone, and price is like tapping this here, and it starts to move up now, right? So it broke resistance, starts to move up, starts to come down, right? So it starts to come down. Now, I know most people here are very, very impatient, right? So if you're an impatient trader, I highly encourage you to have a spread out risk, right? So let's say we're risking not 5%, but let's say we're risking 2%. So when you're risking 2%, what you're technically doing is that maybe you're risking 0.5% plus 0.5% plus 0.5% plus 0.5%, right? So you're risking 0.5% per position. So every sell you're taking, you're risking 0.5%, right? When price retraces, you take another buy. You take another buy, you're risking 0.5%. And when price comes more down, you take another buy, you're risking 0.5%, right? And when you see that, okay, maybe this is not going to do a retest, you close your positions or your stop loss gets hit. How much did you lose? You lost 1.5% rather than losing 2%. Make sense? This is your dynamic risk. That's your dynamic risk. Or let's say if price doesn't hit stop loss and it starts to move up, and then you unload another 0.5%. So now you're in the right direction and you're following your risk plan. So now you have 2% fully running. So it's like martingale. Yeah, it's like martingale, Aubrey, but martingale is generally very, very aggressive, where you keep on adding risk, more risk than you intended to. So that's martingale. It's kind of on the outskirts of martingale, but you're still in your risk parameters, right? You're still risking what you're supposed to risk, but your risk is now diversified, right? Like you have some risk up top, then there's another risk over here, then another risk over here. So altogether, this risk makes up your 2%, right? Or your 5%, or whatever you wanted to risk, right? I used to hedge, but I don't hedge now. I mean, hedging hasn't really worked for me, so I don't really hedge right now, because like when you're hedging, you're basically taking on a lot of risk, right? And that's a lot of stress. So it's just, It's just not. So you change the lots. No, I don't change the lots when you're taking buys on the same risk. Like your risk is the same, right? So let's say you're using $1 lot. Let's say you're gonna take one position of $1 lot, right? So you wanna diversify it to maybe 4 0.5 lots. Make sense? So instead of risking one lot on 10 pips, maybe you can risk 4 0.25 lots at different position of the price. Make sense? So when you see that, okay, maybe this is not going to do a retest, you can close with a lower loss. So now your risk has been reduced, right? Because you only risked a portion of what your risk was. So that's called dynamic risk. This basically comes with practice. Well, you know what? You can really use it, but use it with responsibility, right? Because some people, they want to keep clicking. And when you click too much, that's when you start running into problems. I'm going to have a little sip of water. Right, so what did we cover up till now? We covered what you should be focused on as a person, or what you really expect from the market, right? Next thing is like what you really want from the market, or the times you have to trade, or the currency pair you should be looking at, or what's the time of the day when you think is suitable for you to trade, right? After that comes your risk. Risk is it's the most important aspect of trading, because if you can manage risk, you're going to be in the trading day the next day, right? So risk is very important, right? And this is how you manage risk. You have to strictly abide by your rules. Just like when you go to your job, right? If you're late, what happens? You get penalized, right? Same thing here. If you don't use your risk, what will happen? You lose money, right? So you got to follow your risk plan. Okay, so I have a question, but lot size changes when you reduce your stop loss pips. Yeah. So basically what happens is that when you know market structure, right? We're going to go over market structure later on. You know that, okay, if price breaks below a certain area, it's probably not going to come back, right? So this is where you're placing your stops. Like, okay, if this goes below here, it's probably not going to come back. So when price keeps going lower and you're taking buys, you're keeping the same stop loss. So maybe if you took a buy right here, the stop loss for this buy is maybe around 8 pips, right? That's a very bad drawing of 8. And if you took a buy right down over here, now maybe the stop loss for this buy is 2 pips. Make sense? So that's how you're diversifying your risk. Like your stop loss gets lower and lower before you know, okay, you know what? If market doesn't reverse from this area, it's probably not going to do a retest. Okay, martingale is when you increase risk, if you lost profit. Yeah. Martingale, I've had some very bad experiences with martingale. Lost 40,000 once trying to do martingale. It didn't really work in my favor. All right. The next thing that we have is number of trades versus the opportunities you see in a day, right? This goes hand in hand with your trading plan. So now I'm going to open up this sheet I have on the side, and I'm going to write down what my risk is, like how much I'm probably going to risk in a day. Typically, I'm probably going to now risk like 5% per day. And how many trades will I be taking in a day now? This is very, very important, right? So now let's say that you have a lifestyle where you can focus maybe 3 hours to your trading day, right? Or to your chart. So now you need to see, okay, how many trades am I going to take, right? Realistically speaking, because I see guys who take 5-6 trades a day, right? So for me to be focused, for me to be not stressed out, for me to be like very, very patient, I will maybe need to take 2 trades in a day. That's it. I will only take 2 trades in a day, and I will make sure that I make those trades count. Because what happens? Okay, let me tell you this. When you take a trade in a day and you win that trade, what happens to your confidence level? Your confidence goes up, right? You start believing in your system. You start believing that, okay, you know what? I can make it in Forex. That's what you start to believe, that you can make it in Forex just because you had that one win. Now, when you took that one win, what are you going to do next? Are you going to keep looking at charts? That's up to you, Randall. Randall asked, are you going to keep taking 2 trades a day or 2 trades in a session? That's up to you. That's up to you. What are you going to do? If you won a trade in a session, are you going to continue to take another trade? I know for a fact I'm going to step out of the market. I'm going to stay away from the market. When I take that one trade, that's probably going to give me 5% or 2% or 10%. I'm done. I'm not going to look for another trade because that's it. Why would I want to risk those profits, right? Because when you are looking at the charts, when you're looking at the market, you need to realize that you are fighting the brokers. You are fighting the institutions. You're fighting the banks. You're fighting the unprecedented news. You're fighting Kim Jong-un sending off missiles and Trump tweets. You're fighting all those variables, right? And if you took a punch at the market and you won, be grateful, man, because when you won that trade, what happened? 90% of people lost money when you won. Right? Take that in for a second. Right? They say 90% of people are not profitable. Why? Because 10% are. And when you win a trade, be lucky that you're one of those 10% that you won that trade. And 90% of the people lost. Like, you know what I do? When I win a trade, I tell my son, like, I know, like, my son is 6 months old. He doesn't know what the hell's happening. I tell him, hey, your dad won today. Your dad is in the top 10% because he won a trade today. So you want to be in the top 10%. Because when you put yourself in the top 10%, what happens over time, man? That top 10% becomes the top 1%. So that's why I say, like, always make sure how many trades are you taking. If you're taking a trade in one session and that's all the trade you're taking, if you lose that trade, that's okay. Right? You lost one trade. Right? Now, if you try to take another trade, you might lose that trade. Right? So it's always important. Okay, so what my rule of thumb is, I'm going to enter this one more rule here in my thing here, and then I'm going to share this at the end of the webinar. My one more rule is if I take one loss, that means I will step away from the market for 1 hour. That's my personal rule. Like, I know some guys who step away from the market till the next session or till the next 4-hour candle, but I step away for 1 hour because now I need that time away from the market, right? Because when you lose, you have these emotions running in you. And those emotions are your worst enemies because now you've lost a trade, you've hurt your ego, you've hurt your confidence, you haven't made money, you want to make it back, you have to step away. Go do something. Go make a coffee. Like, go talk to your boyfriend or girlfriend or your dog or cat, right? But just go do something because you need that time away for that emotional stability. That's very important. Step away from the charts. Now, this is also something very important that I see people talk to me about. They say that, okay, hey man, I won a trade, and now the market is moving more, and I want to take another trade. Why? Why do you want to take another trade? Like, okay, a lot of times this has happened in live sessions and even in group sessions that I've taken a trade. and I've got my 10, 12 pips. I've closed the trade, and I see the market move in my way like 20 more pips, right? And all this happens. I close the trade, and it moves 10, 15 more pips. And I'm always thinking, oh, why did I close? That's the emotional part of me speaking. Why did I close? Oh, man, if I've only let it run. That's my emotional part, right? But my rational part is saying, no, no, no. You followed your plan. Your plan said that you will take 10 to 12 pips. You took those pips. Now, you shouldn't care if the market is moving 50 pips in your favor, 1,000 pips in your favor, or better yet, you took your 12 pips and the market just reversed against you, right? So what happened in both cases? If there's still opportunity, what do? You follow your plan, right? Like a dog, you follow your plan. That's what I say. Like every person you see around you, they're all working, man. They're all working, struggling, and then you have this avenue to make money, right? Which is very, very seductive. I'll tell you this, it's very seductive, but you really need to stick to your plan. There's always going to be opportunity. Always going to be opportunity. If you miss a trade on your planned retest and someone else says, hey, like, you know what, the price is going to break resistance, that's going to break support, and you quickly want to jump into that because you see that as an opportunity, it's not going to work. It might work, but it's not your opportunity. That's the thing. You really have to focus on what you're doing, right? So I have a question. Hey, wouldn't it be a good idea to get those 10, 12 pips? Then you put stop loss at 12 pips. Yeah. So the idea about placing stops at break even is when you have hit your mark. Like, let's see, sometimes what I do is that, or actually I have this guy, Ryan, really good guy. He's getting very disciplined now. What he does is that his plan is to take 10 pips. So when he takes 10 pips, he lets 20% of his position run with stop loss at break even. So what happened here? He took a trade, it ran into 10 pips, he secured his bag, right? He secured his profits. Okay, so now he has profits in the bag. His stop loss is at break even. So now he has a risk-free trade. Even if the market reverses and stops him out at break even, it's okay because he bagged his profits, right? Last week, he let that 20% run and it ran 70 pips in his favor. Can you imagine letting a position run for 70 pips in your favor and you're a scalper? How does that happen? It happens when you follow your plan. It's not going to happen all the time, but it's going to happen that 2 or 3 times when you're going to make more than what you expected to make, only because you're following your plan. That's happened to me too at times. I'll close, let's say, if I have a, let's say, 5 lot running, right? If I have a 5 lot running, I close 4 lots at 10 pips, and then I let 1 lot run wherever it wants to go. This one day I woke up and I was up 80 pips, right? Discipline. It's just letting things run in your favor because you're following your plan. Okay, so let's see what we have next here. How do you condition yourself, right? How? Conditioning yourself to following your plan is having a shift in your mind. Like, you literally need to have this shift in your mindset, right? You need, because now when people come to me, they have these bad habits, right? All these bad habits that they've developed over time. Maybe someone told them that, hey, you can trade this pattern at every day of the, at every, like, you know, like every hour of the day or every day of the week, you can trade this pattern, right? So you really need to condition, you need to train yourself. And the only way to train yourself is to just focus on, maybe, I'm going to say it again, 1 or 2 trades a day. You need to focus on your plan. You need to see, okay, what do I need to do every day to make this work? Okay, so I have a question here. How do you manage a position that you set on break even, let it run? How do you properly swing at its maximum? Okay. The thing about letting positions run is just letting them run. That's the thing. You never know, right? Because trading is subjective. You can only control what you see. You can't control what you don't know or what you can't see, right? Because people ask me all the time that, hey man, like how come your position ran 40 pips? How did you know it's going to run 40 pips? I didn't know. It ran 40 pips. Or you can go back in the chart. In hindsight, you can draw a zone up there and you can say, oh, hey, look, there was a zone up there. It was a zone to zone. Easy to say. But it's not easy to say when you're in the position, right? If you're in a trade, you can't just say, oh, hey, it's going to go to that zone. What if it starts to retrace? What if it starts to come close to your stop loss at break even? Is it still going to go to that zone? I don't think so. Then you start doubting yourself, right? So the best way is to just bag your profits, get those profits secured, and let it run wherever it wants to go, right? It like I'm sure people asked, what's his name, Ryan Ashley, that day, hey man, how do you know it's going to run 70 pips? He doesn't know. He just ran 70 pips. He just had stop loss in profits. If the price just went, right? So that's one thing you really have to know, because like most people, what they do is you overcomplicate the market. You overanalyze, and when you overanalyze, you have that analysis paralysis. Then you can't take a trade when you overanalyze. When you put stop loss at break even, stop worrying about trailing stops, or stop worrying about like, okay, where's it going to go. One thing that has really helped me with letting positions run at having stop loss at break even is like, let's say if it breaks a 1 hour resistance and it's moving up, and just like, put stop loss like a little bit higher. That's all what you can do. But like market is going to do what it has to do. All you need to do is how you are going to perceive it. That's the most important thing. So I'm sure everyone is writing down their plans. For now, in my plan, I have written down the time I'm going to trade. I have written down the market open time. I've written out my risk, the number of trades I'm going to take, and what I'm going to do when I take a loss. So we're going to